So for those of you that aren't aware, there was a coup attempt against the Saudi king on Saturday. So you do Saudi Arabia coup. There's an attempt on the Saudi king yesterday, and today he friggin' purged the kingdom, even detaining his brother, his nephew, and there are rumors that those people are dead now. Now what we do know is that after a few hours after that, Saudi Arabia announced they're going to dump all their oil at like wholesale prices, and they even are using the words crazy dumping of oil prices. Just like, see, these are the headlines: crazy Saudi oil cuts. And so as soon as they did this, crude oil just fell through the roof. It was negative 10% when I saw it last, but now there you go, negative 30%. Negative 30%. So if we just go out to here, it was like, what was that, 28 bucks? My goodness. So it was, that's unbelievable. It was $42 when markets opened on Friday, and now it's 28 bucks. So that means I saw gas outside for $1.85 in Houston, Texas. It's going to be like $1.50. I've been predicting that for ever since I saw this Wuhan thing in early January. But negative 30 friggin' percent. I'm taking a snapshot of that because that is historic. That is historic. 30% in one weekend. And just wait till tomorrow. It could get way worse. Historic plunge. Oil down negative 30% in one weekend. Alright, so let me just send that to Signal real fast. So what's happened is that now Saudi Arabia is in a war with Russia, an economic war, not a hot war, not yet, where they're literally trying to bankrupt all the Saudi Arabia, all the Russian oil companies. They're also trying to bankrupt all the oil companies in Texas, all the shell and fracking, and this might very well do it with everyone getting sick. So yeah, like I said, I saw oil at negative 10% last time I checked, and then I come back to you guys and it's negative 30 in like 2 hours. So oh boy, gear up. So the big news is that the stock market is having its worst day ever before the market opens right now. And by worst day ever, I just mean point wise. The market's up higher than it's ever been. So percentage wise, we're just in the I think the mid 30s. Like, let's see, percentage-wise. No, we haven't. Yeah, mid-30s. We're somewhere down here, percentage-wise. But then market share, point-wise, we're all up at the top. See, Wuhan flu, Wuhan flu, Wuhan flu, Wuhan flu, and then the bottom 21 is also Wuhan. So the cool thing about this is if you go to the view history page, you're gonna see me. Right there. I added the largest point drop in history, which is pretty cool, I think. So what you have to do when you're analyzing the stock market is there are two very important metrics that anyone can go. And so what you want to do is you want to go to finance.yahoo.com and pick the stock that you're interested in. I'm going to do Apple right now because I have a friend who has a whole lot of money in Apple, and I want them to make sure they're okay. So we're gonna go to Apple, and so oh my God! Oh wait, that's it. I freaked out. I thought that was the stock, but it's just an option. Man, how did that happen? Okay, that's much better. Okay, so you go to the stock markets. And the most important number right here is this thing, the 52-week range. You'd have to be a sucker to buy if it's anywhere near the 52-week range, because you want to buy low and sell high. So if it's at 180, 200, sure, go ahead and buy. If it's at 330, you're out of your friggin' mind. So let's see, when was it last at 330? Well, we're going to double click here. Wow, that's unfortunate. I'm going to go into incognito so we start scratch. So if we look, my goodness, it was $330 at the end of the current order. As all of you guys following me know, I maintained at the end of the old order that it reached its high on February 2nd, 2012, and that the old order started to die right around that time. I believe today, 3/9/2020, may be the end of the old order as we know it. And now we're in a transition period, a demilitarized zone, a buffer between two epochs we're living through right now. That epoch has started with the first, what I believe to be a legit rumor, because I've personally called, of the Permanente medical quarantine. This rumor right here, the dozens of Kaiser Permanente's Westside Medical Center in Hillsboro, Oregon, that they locked down this hospital, that they locked it down today, because according to whistleblower nurses that we haven't been able to confirm yet, but I have called and I couldn't get in touch with anyone at the hospital. They could tell me anything. But apparently these doctors got exposed to coronavirus, 14 days ago, and now they're supposedly locking down the hospital because a whole bunch of them became ill today, and so they're saying no one get out because we don't want to sacrifice the city of Portland. So whether or not that rumor is true, if hospitals do start quarantining people, then we need to applaud them, because they are doing more to keep people safe than the U.S. government has been doing. The U.S. government has not done a good job quarantining people at all. They let that guy. Oh, anyway, that's another topic. So I believe that I believe that when the medical personnel start dropping like flies, that will be the signal that the old order is completely ended, and we're going to start seeing more wars, more civil breakdown, like what's happening in Turkey and Italy, with Turkey sending the thousands of Al-Qaeda, ISIS terrorists over into Greece, and with Italy and 25% lockdown, with people mass panicking and spreading all throughout Europe as fast as they can, like a metastasizing cancer. As soon as you start seeing reports of medical personnel in Northern California and Seattle dropping dead, you know that your life as it was in January 2020 is over, and you just have to prepare for the long haul. So anyway, you go to these stocks and you click on this to get to the interactive chart. Now, what we're going to be talking about are two very simple fundamentals and probably one chart pattern. So what you want is what's called the RSI. I'm not for sure what it stands for, but let's find that out. I know it's the relative strength index. All right. So what RSI does is this market is working on 30-day cycles. I think that's because coronavirus takes about 30 days between your exposure to when you start showing symptoms. And our market is very panicked, so we're going to say overbought 75%. And because they're going to panic, they're going to oversell. So I'm going to drop that to 15%. So now here's our band. And it works best in 30-day increments. So I'm going to go to the 1 month mark. And this is one increment. Actually, I'm going to go to... Let's go to year to date, because that's like the wonton sickness. So right here would be considered a very high band. It's at 78. Anything over 80 and even the best times means the stock's too high relative to how much people want it. So anyone who bought Apple stock at an RSI of over 75 when it was at its 52-week high, they're idiots. They're morons. You should never listen to them for financial advice ever. Anyone that bought Apple between, I would say, December, let's look at it, RSI 60, 60, 70. Anyone that bought Apple between, let's just call it December 24th and now is just a moron. So let's go to this. There we go. This is the crash right here. So what stocks will naturally do is they want to try to get an RSI of 50. 50 means that it's neither overbought nor oversold. So you're working purely on, is the company going to make me money in the long term? Very few stocks in our modern age, in our past age, I should say, worked on that principle. It's all hype. Companies buying their own stock, the Fed pumping in billions to artificially raise them, just so politicians can get elected and brag about it. And I'm sure you've all heard Trump brag about the stock market. It's going to cost him his career, among other things, even if we didn't have this coronavirus. So we can see that on 2/28, when Apple really fell, all those dark days, the RSI dropped to, it looks like, 38. So in normal times, anything below 50 would probably be a buying opportunity. So we can't necessarily fault people who bought on or after February 28th, or really February 24th. They aren't necessarily idiots. They might be uninformed because of coronavirus, or they might be trusting too much their government officials. So we're not going to pass judgment on any of these people. However, what's going to happen is because this is a panic situation, your RSI probably will not stop at 46 where it's at now. It's probably going to go much lower. Like, as you can see, you can have panic RSI because I set it a little bit lower. So 0 means absolutely no one wants it, and -10 means not only does no one want it, but people who want to keep it are forced to sell. That usually only happens during cataclysms like the Great Depression, the 1987 collapse, and the Great Recession. However, I truly believe that for Apple in particular, we're going to see negative RSI, because in this new epoch we find ourselves in, who needs a 2 times overpriced smartphone that can't even be made anymore because the factories are all shut down because everyone's sick? Yeah, I'm very bearish on Apple. This is not financial advice, just sort of education. So historically, you can see it 46. So remember, 46 is like where stocks should be in healthy markets. 46 hadn't been met in basically 6 months, and it's very rare for Apple. Like, it usually only happens when the stocks are doing relatively bad. So all these investors are going to be totally shocked when it goes that low. So now what we want to talk about is the most important stock pattern for the coming epoch. What's going to happen is every single stock market, every single stock, and especially the ETFs, are going to follow what's called filling the gap. What does filling a gap mean? Well, many days, if we can go to the 5-day range, you'll see it. Many days, stock markets don't actually close at the same price that they opened. So for on 3/3, we see that it closed at 289, and on 3/6, we see that it opened on 296. See that? Closed at 289, opened at 296. That $7 gap, $6 exactly gap, is what's called a gap, where it closes before it opens. And so the stock market has this trend where it always tries to close that gap. That means that when it shoots up like that, it's going to try to shoot down to fill the gap. So if the gap right here was 288, it's going to try to close that gap. So here's the first try. It tries to close the gap, but it didn't even close the gap to 290, which was the open. So then they kept going. Well, this one shot up, so we can go. It went from 2. This one shot up. It didn't quite fill the gap. And so then on 3-4, it really tried to fill the gap at 3-5. But it didn't quite get close enough. Remember, it has to get all the way down here to 290. Actually, it probably needs to get down here because people are panicking. But special significance happens on the open and close dates because that's what ETFs follow, and also like big firms and especially pension funds and investment 401ks always pay much more attention to the close and open than they do anything else because they think that makes the stocks more stable. But in reality, it does the opposite. The computers go nuts and just rape all of your 401k accounts, in case you didn't know, based upon that. And so, really, we're looking for a 290. No, here it is. A 289.31. We're looking for that. So we keep going. Boom! It closed the gap. It closed at 293 and opened at 284. Now, this is also a gap, and so the stock market will try to fill this negative gap. However, we are decisively in a downturn. In downturns, lower gaps don't get filled until the next upswing. And the next upcycle might not be for a very, very long time. If you're going to lose 15% of the U.S. population, it could be 50, 60 years before Apple could close the gap, and that's if it survives. But needless to say, it made a valiant effort to close this gap. It needed to get to, close. It needed to get to 292, and it almost got there at 288. It was only like 0.5% short. But needless to say, because it didn't close the gap in a bear market, it definitely signaled that the bear market's going to continue. That's called a lower high. So you have a high, a lower high, and this is a bullish pattern because they're higher highs, and then lower high, lower high, lower high. They're all lower highs. So what you see right here is called a classical bear. A classical. Let's get further out. Let's try this one. A head and shoulders pattern, in a sense, because this is the right wing right here. Here's the guy's head, and then here's the next arm being formed. And so stockbrokers really pay attention to that. And so if that's a head, it's a very, very big head, and it's a very big shoulder. And that's what we're going to go through in just a little bit. Now, there's something called Bollinger Bands, and they're what the boundary marks between how high a stock will usually go and how long it will go and how far it will go down. So as you can see, in bull markets, they always go a little bit above the high band. Right here, here's a bull market. And if we just ignore the Wuhan plague, you'll be able to see that for the vast majority of its life, look at that. You have the 2015 stock market collapse, but for most of its life, Apple stays very, very high on the band. Look, see, there's the fiscal collapse. It barely did a dent on Apple. So Apple's a very bullish stock for most of its time. What happened? So now let's go back, and now you go boom, way below the Bollinger Band. Now they tried to do a comeback. This is what you call a dead cat bounce. It's where it goes down, then it goes back up, but then it doesn't have enough steam. And so what you're going to see tomorrow, more than likely, if not tomorrow, certainly by Friday, is that this line is going to go well below the Bollinger Band, because we're like, see, here's the trend. This is the day that the Apple's bull market was over, 221, and I don't think this bar is going to revise itself in the next 5 years. I just don't. I don't see Apple going positive for a long term until after this flu is over, and that means after a vaccine, after quarantines, and after millions of people stop dying, and after the world starts rebuilding itself. And is that a world where people will care about 2 times priced over phones that are made in a country 2,000 miles away by slave labor, who are basically all dying right now, or at least they were. China did a good job supposedly keeping it under control, but I just wonder how much of that's propaganda. So if we go back out, where will this end? Well, remember how they closed the gap? Well, gaps aren't just closed on a daily basis, they're closed on a weekly basis as well. And so if we shift this to 1 week right here, then here are our gaps that we need to close in order to change this bear market around into a bull. Until these gaps start getting closed, you can assume that we're still in the bear market and that we're just going to keep closing down gaps. So the first down gap we need to close is this one. Pretty simple. 289, 273. That's 273. I read it wrong. So we need to close 273 to continue in the current bear cycle. That, like I said, will probably happen tomorrow, or at least it looks like that. The next major gap would be right here, 202. This is where we bust out the calculator. So we got 288.95 minus 202 divided by 288.95. 30%. You're looking at a 30% loss just to get back to where we were in August. I think that's totally possible. I mean, we just saw the oil collapse 30% in one day. So then, unfortunately, there's not much of a floor right there, because you can see this gap hadn't been met. So more than likely, when we get here at negative 30%, the Apple investors are going to lose their shit. It's going to be all irrational, or even rational if you know what's happening with swine flu. And so it's going to quickly go to here, to 156. I've been calling this out for a long time. 156 is the current price of Apple. So if we go to my Twitter feed and we type from Hope Seeker AAPL, we will see my prognostications about Apple. I believe let's see. Wow. I can't really find it right now, but I've openly predicted on the internet that Apple's going to fall about 48% from its highs just a few days ago. So if we calculate that, 288 minus 148 divided by, there you go, negative 49%. I totally believe that Apple will be this low in the next couple months. Certainly before you look at the headlines that came out this week that I've been saying for weeks and weeks, 100 million infected by May. Hospitals completely overwhelmed by May 8th. Well, Google is censoring that. That's funny. Twitter really is the source of truth for this thing. Hospitals overrun by May 8th. So if this is legit, I honestly think that May 30th is the number and not May 8th. However, if all the hospitals in America are overrun, you're looking at a death rate of about 15%. But what's more is all the blood donations are going to dry up. You're going to, like pun intended, you're going to have a complete shortage of blood by August. People will start dying of minor car accidents and just minor problems with surgeries because there won't be any availability for blood. I mean, think about what it will do for women who need C-sections when all the hospitals are filled with plague ships. All the births are going to have to be done from home. So many people are going to die from just crazy stuff that we wouldn't even think about, like tuberculosis. I guarantee you that when the nation is crippled by COVID-19 and around August, tuberculosis is going to make a comeback. It's already out there. You're going to have people with weakened immune systems fighting for their lives, and we're just going to start seeing plague after plague. And because the hospitals will be so overwhelmed, so unsafe, and so many first responders will be like on their deathbeds or dead by then, that it's not going to look pretty. So that's one of the reasons I'm sending this alert out. So now let's go and focus on the S&P 500, because that is what's going to be really, really nuts tomorrow. People are no longer buying stocks directly. What they do is they buy these ETFs on stock indexes. Like you cannot buy the S&P 500, but you can buy something called SPY, which tracks it. That just means that they try to buy it more. They try to buy it more when people buy SPY. SPY tries to buy all the stocks in the S&P 500, and they sell the stocks when people sell it. So look at this. This is our current world order right here. So you can see the U.S. economy on a whole is very much in the negative boiler bands, because there might be more crazy people buying Apple than there are buying the U.S. equities. So if we look right here, the equities were at 69. That's not crazy like Apple. And in February they reached, 52. So fair market value right there. Now by the top of our current world order, 212.22, it was at 65, which is about the highest you can rationally get. At the lowest was 30. Right now it's at 40. So I expect this to drop a whole bunch. I think that the market's going to completely oversell. As you can see right now, it's inside of normalcy right now, but I believe that number is going to be way, way worse. So how much worse? Well, we need to fill in the gap. So let's go back to our 1 week, and here are the gaps we need to close. The very first one that we're going to close in the first 5 minutes. I think it's already closed after hours. Let me find out. Let's go to money. So it's at 2110 or 2820. I misspoke. So at 2820, right here. So it's already closed all these gaps. All these gaps, the market predictions already come true. So it's going to go straight to this guy. This guy was when the stock market should have collapsed. The Trump administration and the Federal Reserve managed to prop it up through shenanigans, which is outside of this. But very, very, very soon, maybe next week, maybe tomorrow, I believe the S&P 500 is going to go to 240 really quick. So let's go to 288. Well, actually, I'm going to go back to the S&P 500. I might get more legit. Let's go to 1 week. So yeah, this got hit. This got taken out. So we're going to go right here, 2416. So 2972 minus 2416 divided by 2972. We're looking at a negative 20% drop. I think by Friday next week would be a fair estimate. Now it already went from 3380 to 2820. So yeah, so I'm expecting another 18% drop. We've already seen it drop, or we've already seen it drop 16.5%. So that is not unrealistic. Now this dropped well outside of the Bollinger Bands, and the RSI fell to 40. So I can see why the market overreacted. If you look at how the world was in 2017, 2018, it wasn't really that bad. We certainly didn't have anything like coronavirus on the rise. So I seriously think that this is going to come here, but I believe this will be the new normal. So I believe this will happen next week. So what do we expect after that? Well, you have to go quite a ways. And so you could theoretically say it's this guy at a 2085, but notice how it just barely dips. Now that was right before the election of Trump. I guess this must have been the Comey email. Remember that near Halloween when Comey sent those emails about something happening with the Hillary administration? I think that was that. But because it was so far inside the Bollinger Band, a gap never formed. So we're going to have to go right here. See that thing sticking out? And so let's pick this guy. 1865. So let's do 2820 minus 1865. Actually, let's start from the old world order, the high of the high. Well, that looks damn near 45%. That's what I've been calling for since February 2020th, roughly. It's like the S&P 500 will close at a negative 45% sometime in the next 6 months. Since it's progressing far faster than I had thought, I no longer think it'll take 6 months. I think it'll take about 2. I thoroughly believe this will happen around the end of April. Right when the quarterly reports come out for this time period. So what you want to look at is you also want to look at volume. The volume here is crazy. You can just see 30 billion shares, $30 billion, actually 30 billion shares. And so let's go see how high it was at the Great Recession. It's hard to see. The Great Recession So if the Great Recession were, the line just won't reach, but it's almost as high. So now if we go to the Dow Jones, let's do that real quick. Come on. Here we go. Damn it. Disappear. Let's go to 1 week. Let's go to 5 years. So with the Dow, we could see it hit 22,000, but that'll be a no-brainer. It's going to go to 20,000. So then we go to right here, and we go to 16,630. Right here, 16,000. 16,000 is where I would largely expect the Dow to be in the next 2 to 3 weeks. It's going to get there, and it's going to be very bad. Well, no, not 2 to 3 weeks. I believe the coronaviruses will need to reach about 10 million people. And so if we look at that and we assume we're at 50,000, so then we got 100,000, 200,000, 500. Billion. So May 22nd, sometime between between April 24th and May 22nd. I expect the Dow Jones to be right around here, around 16,000. Sorry. I believe the RSI for all these stocks will be in the negative range. I believe all of the shorts will find problems getting out of the market because you won't find people that are willing to buy, buy, and you have to find people willing to buy in order to exit a short position. So I think the shorts will be left holding the bag as company after company go out of business, taking the shorts with them. The first companies to fall will be the do nothing for the new epoch. So the very first ones would be like closed stores. Imports would be go out of business first. So whenever we see that Pier 1 committed bankruptcy, I think it was the very first store to be affected by coronavirus on February 17th, right 5 days after I believe the economic order ended, or began to end. The other ones on my list are Apple. Let's see, Home Depot. Home Depot won't do good. Any car company, cars just will not be bought. So let's look at Ford. Let's look at GM. GM is much worse shape than Ford. So, yeah, look at that. From a high of 40 to a low of 28, down negative 8%. Wow. So yeah, they're definitely believing it. Yep. So let's go back and let's see if there are any head and shoulders patterns. Well, this is probably the left shoulder right here. This is probably the left shoulder. This is probably the head. And if the markets are somewhat sane, you're going to see a bounce back. Probably a minor one, probably a sick one. Where if I go into, let's do a screenshot. Online Paint. If you're still using Google for your search engine, I feel sorry for you. So I see it. Let's see it going down, then I see it going up, and then I see it going way, way, way down, just like this, or maybe even more like that, like a free fall. And so if that's the case, where I would see the Dow going in the next 3 months would probably be around this area. Like just crazy stuff, what we would consider crazy. So the next gap, where is it? The next gap after 16,000 will be this guy at 8,000. 8,000 at the .com crash, 7,700. And after that, the only gap you have left is the stock market .com collapse. But that's also around 8,000. See how it filled the gap right there. That's a primary example of how it filled the gap. The next one we got is way down here. The stock market collapse of 1987 at 1959, which is just unfriggin' believable. So what it could mean is that we could see a collapse of literally 24,000 points before 2021, and that just means the U.S. economy is giving up all hope. It means that if China has this under control like they claim, I mean, if we go to the Wuhan stats and we look at China, well, China basically has this under control. They're only reporting double digits. Most of these countries are so out of lunch that they're reporting hundreds and hundreds of cases. So the rest of the world's going to outstrip China in about 2 to 3 weeks, because it doubles every 6 days in most countries. In some countries like Iran, it's doubling much faster than that. Iran just had 200 cases about 3 weeks ago. So if you do and then times two, in 2 weeks, the world will have 94,000 people. In 13 days, the world might have 100,000 people outside of China with this, and so then we're just gonna keep doing that. Let's see, 6 days, so 100,000 by the 27th, and so then we got about 200,000 by the 3rd, 10th, 17th, by the 10th, by the 17th, 1.5 million possibly by April 24th, and this week, April 20th through the 24th, is when you get a whole bunch of your company financial reports, especially Apple's. And so I truly believe, like, if you read these articles, if you go here and you say market discounting coronavirus month of February. So just pick the first one. Haha, that's over optimistic. The bull market is still in charge, and there's plenty of room to run up. Let's see what date that article was. February 10th. Ha 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 ha. So let's go back to February 10th. This should be fun. Let's go back 1 month. February 10th, baby, right here. February 10th. The Dow Jones opened at 29,000. This was right before the world empire, the world epoch ended. The next day was like its all-time high. 2 days later, 29,400. The all-time high, 29,551. Donald Trump missed Dow Jones 30,000 by 449 points. Oh my God, I bet he's so upset. So yeah, this article is full of crap. It was written before in the old system. This is worth archiving because these people are going to have pie all over themselves in just a few weeks. Let's go ahead and archive that. Man, I saw stocks like that. So in 2008, when I was making a bucket load and the stock market collapsed, they started seeing V-shaped recovery. That's what you're going to hear a whole bunch. So look at this. We're going to go back to 2008. Velocity in the V-shaped recovery, he proudly proclaims. So let's go back to October 20th, 2008. Let's go back into our time machine. It's going to take too long. Here we go. October 20th. I wonder what happened to the stock price though. Oh, I have to set this to 1 month. All right, here we go. 1 week. Thanks, buddy. Man, leaves something to be desired. Maybe I can. Oh, here we go. Date range. I want 10/1/2008 to 12/31/2008. So here you go. The article was written on October 20th. So the Dow Jones was 8,852, a high of 9,300, where it closed on 822. And then you go all the way down here to the bottom, 7,552. But then that's not it. After that article came out, it dropped all the way down to 6,546. So this guy's claiming right here that it's a V-shaped recovery, and of course he's saying that this little thing, that this is the V right here. See that? But then just about 14 days after they made that prognostication, it went way, way down. So when they say it's a V-shaped recovery today, you can pretty much say that they're full of shit, because we don't have anything remotely that optimistic. So look, they're using the exact same words, the exact same propaganda that they used in 2008. They're using it in 2020. So I don't know what to tell you folks, but I do know what to tell you. They're lying. Everyone's lying about everything. I think it's just so the elites have enough time to bug out, get their own personal peptide vaccines. If you didn't know, someone released what they claim was a personal peptide vaccine for the COVID-19 pathogen right here. They did it on January 31st, right there, January 31st, 5 a.m. Central Time, which just happens to be about 5 p.m. in China. And so this is really, really interesting. I've been thinking ever since I saw this on literally February 2nd. I don't know who this guy is, but it's very interesting. I've been thinking it gives the elites just enough time to create their own specialized vaccine before they break it down. So I'm claiming that the time to really start worrying about the spread of coronavirus is when the Dow Jones sees negative 1,500 in a day, and really worry at negative 2,000. And we're just, we keep having these days where we're a few points away from that. So good luck, everybody, and stay frosty. This is Hope Seeker signing out.